Risk comes from not knowing what you are doing. Warren Buffett tells us that, and I agree 100% with Mr. Buffett. And what we do here at chartingwealth.com every single day is help you reduce that risk by teaching you how to read stock charts. Because the trick is never buy when things are too high, and wait until things are low to jump in. Wait until things are rolling over in order to get the best deal on a down move. We're all about helping you reduce that risk by knowing what you are doing each and every single day. That's what we do. Great trainings available at the website chartingwealth.com. It's all for free. You can go through methodically all of the trainings we have loaded up at the website. Also, we have trainings at the YouTube channel. Be sure to subscribe to the YouTube channel. Help us out there. We love your YouTube comments. Please, if you look down at the bottom of the screen, if you're watching the video right now, bottom right-hand side, hit the subscribe button. And again, give us comments. Let us hear from you. If you would like to get everything we have to offer, go to the website and sign up. We will send you an email every day with the daily market review along with the weekly review and forecast that goes out on Friday afternoons after the market closes. That's when we announce weekly vertical crossovers, the most powerful thing that you will ever see on our charts. As I scroll back for those who are watching and show weekly vertical crossovers going down, going up, going down, going up, we are trend followers. We capture the money in the middle is the way to look at it. All that fat from where things roll over in one direction or roll up or roll over going down. Now, as we jump into today's charts, and again, we go through 4 charts. We go through 2 stock indexes, the S&P 500, the Nasdaq 100, which are our tech stocks. We look at 20-year bonds, and we look at gold. And folks, I'm telling you, that's all you need. Now, if you want to know more, fine. People ask, hey, can I use your method on the Forex? Can I use your method on Bitcoin? Can I use your method on stocks? Can I use it on other commodities, other ETFs? Can I use it on mutual funds? Yes. Yes, you can if they are chartable. And again, those of you interested in Bitcoin, we have our own special Bitcoin chart and Bitcoin training. Become a Patreon member. We'll send you that training for free. You can see links in the show notes to be a Patreon supporter. Remember, we give this out to you free on a daily basis. If you want to, again, give a little back, we so appreciate that. If you've not purchased our book, we send out dozens of these every single week. You need it. Charting Your Way to Wealth. Spiral bound, autographed by me, sent directly to you wherever you are in the world. If you're overseas, please email us, cw@chartingwealth.com. We'll send you a PayPal invoice. If you're in the States, just go to the link in the show notes. It'll take you to our Square page where you can buy the book and we'll get it out to you. So let's talk about what's going on first on the S&P 500. Down for the day, 0.31%. But what do we see as far as our weekly candle goes? Well, we still have a green up candle. It was red on Monday, turned green on Tuesday, stayed green on Wednesday. It is a green open, it's a green closed box candle with a down wick. We looked like we were going to we'd be much closer to a crossover going down on Monday, but it had that pullback on was it Tuesday? It must have been. And anyway, it turned into a green candle at that time. So we'll see if we have a crossover going down by the time the week is out. We still have all day Thursday and all day Friday. Again, down for the day. Like I said, derivative oscillators losing upward momentum. Looks like it's getting close to crossing over. Price percent oscillator also hasn't happened yet. Now again, we'll just continue to watch, see what we see. Remember, the most powerful thing we see on our charts are those weekly vertical crossovers, and they're also some of the most accurate ways to follow trends. What do we see going on the 2-day chart? We see a real sideways slide. Now we saw that's 8 days of strong down movement and then sliding sideways at this point. Derivative oscillator losing downward momentum. But that all-important price percent oscillator is still heading down. And what do we see? The prior candle for Monday and Tuesday was a red spinning top. This is only the first day of the latest 2-day candle. It's a green, it's barely a green spinning top. Again, indecision, tending up. We see that price percent oscillator still going down. What we have underway is a sideways slide. Of course, that latest 2-day candle, the 2-day candle from Friday, that's representing Thursday and Friday of last week, busted through the strong down movement and sent us on that sideways slide at this point. If we look at the 4-hour chart, what do we see there? Well, the 4-hour chart still moving up, not enough momentum to have it cross over going down. Derivative oscillators lost a lot of energy. That price percent oscillator still heading up. We can see basically red spinning tops in the morning and the afternoon, indecision tending down. We'll wait and see how things sort out. Things are going to sort out one way or the other. We're going to see the weekly chart bounce off the red signal line and head up, or it's going to cross over this week or next. We'll see what happens, and guess what? We let the charts lead us. We don't push the charts or force them. People who are thinking about, oh, Monday's a down day, let's go ahead and jump in and go down. Well, you would have gotten hammered on the pullbacks, wouldn't you? So we'll wait and see. Patience is always best. First rule, don't lose money in the market. Second rule, remember rule number 1. We go to the Qs, the Nasdaq 100, the tech stocks. What do we see going on there? Well, we're entering to our 3rd week of down movement. It's a solid red down candle, but what makes it interesting is the wick on the bottom has not plumbed the depths that it did the prior week. So we still don't have a crossover on the Nasdaq 100 either on the price percent oscillator. Derivative oscillator has gone negative, so there's a little more downward sentiment in the Qs, the Nasdaq 100. But we see the 2-day candle, the first day of it is a green candle, and again, not moving lower than that prior 2-day candle. Derivative oscillators lost a little bit of downward momentum, but that price percent oscillator is still spiking down. We go to the 4-hour chart. What does that show us? Again, a big sideways slide. Things bottomed out back on Monday and then have sort of been ticking a little up on Tuesday and then down on Wednesday. Price percent oscillators positive, derivative oscillators negative. Again, you got to wait for the Qs and the S&P 500 to sort themselves out. We're going to let that happen, and we're going to let the charts lead us. Again, we're entering the summertime trading zone. Talked about that over and over again. Best time of year when things trend typically cleanly and for a while is the fall-winter trading zone. Summertime trading zone, a lot of the volume leaves, people go on vacation. And what ends up happening is you get these sideways slides up and down, trying to sort itself out. It's the sucky time of year to be in the market. So realize that every year, as the weather gets warmer, the market gets more jumpy and not nearly as much fun to be able to trade. It always happens, okay? That's the way it is. So let's see. There's typically a summer low, though. So maybe we're heading there, maybe not. So we're going to go from the 4-hour chart back to the weekly. We're going to get into TLT, 20-year bonds, up for the day. The only thing up for the day, 0.57%. Now, as we look at bonds, though, we can see that we really haven't, the wick on top of the green up candle really hasn't gone above the prior wick for the well, just barely maybe, just barely. But again, the derivative oscillators gaining momentum, price percent oscillators heading up. But to have really strong up movement, we would like to see that going up more, and maybe it will before the end of the week. Again, we're in a confirmed down move and have been for many, many weeks on 20-year bonds. We go to the 2-day chart. What do we see going on there? Well, the derivative oscillator is losing momentum, but that price percent oscillator is heading up nicely. And again, that's where we also see that sideways slide. We see where things topped out all the way back on the 2-day candle ending Friday the 17th. Of course, that represents Thursday and Friday of last week. And then things just sliding sideways, pushing through the 2-day trend line. So that's enough weakening to violate that 2-day trend line. And what do we see on the 4-hour chart? Up movement in the morning, more up movement in the afternoon, but not enough to cross over. Going up, told you to be watching for that, because if indeed there is a crossover going up, Since you have the weekly and the 2-day moving in the same direction, gives you the opportunity to pull the trigger on an up move. Now, the only caveat when you're this long in the tooth, gosh, we go back a long way, all the way back to, oh my word, all the way back to late November of last year is when we had that last weekly vertical crossover. We've already had a higher top back on the Thursday, the 28th of March, and then we've not been able to get higher than that at this point. So again, we'll watch and see if opportunities do present themselves to jump in to a practice trade on an up move on bonds. You can sure do that. Keep your eye on that 4-hour chart for a potential crossover and an up play. Lastly, as always, gold wraps it up for us. Let's look at what's going on in gold. Remember, we had a weekly vertical crossover on gold all the way back on the week ending the 29th of March, and gold has been trundling down and sideways since then. This is the first down week we've seen over the last 2 weeks. Derivative oscillator still losing downward momentum, but that price percent oscillator on the weekly chart, our big wave is heading decidedly down. Now we're waiting to plumb the depths of where we got the lowest around 119.55. Market closed at 120.24, so about 75 cents away, 70 cents away from that. We'll see just what things are doing. We go from the weekly to the 2-day. And the 2-day is crossing over going down, trying to do that. It again, I say trying to do that because it hasn't finished drawing yet. And as the market closes on Thursday, we'll know if this is going to be a confirmed crossover going down. If it does, it puts us in the neighborhood of a down trade on gold. Again, we had this crossover going up on the 2-day chart back on the 9th, that's the 9th of May, last Thursday. Then it went up for 4 more days, and then has been going down 5 days at this point. We'll just see if it's going to knock down and see if it can test that low before at 119.55 or so, and if it'll go lower. So we'll wait and see how that plays itself out. What's up that 4-hour chart? Of course, you can see where things had bottomed somewhere around the 120.55 mark, and then, of course, dropped lower, actually hit a low of 119.83, and really sliding sideways since then, like we said, closing for the day at 120.24. And we'll just watch, wait, and see what happens. We want to see that 2-day chart crossover going down, so we have that confirmation before we can look at resuming down plays in gold. So that's where we are, folks, as we end the day on Wednesday, go into Thursday. So appreciate you being with us. Again, purchase the book, become a Patreon supporter, do what you can to help us here. You have questions, problems, concerns, write us, cw@chartingwealth.com. Do click the bottom right-hand side of your YouTube video if you happen to be watching us on YouTube or you're getting the email and watching it there. Click that and subscribe. If you're listening to us on iTunes, of course, you can see all the links in the show notes to buying the book, finding out more about Patreon support, getting for free. In the show notes, you will see the daily market worksheets, weekly market worksheets, and trade worksheets. All that stuff is there for you. Go to the website, check out all the great training that we have. I recommend you go through at least 1, maybe 2 trainings a week. Take your time, study them, take some notes, pay attention to what it is you learn, and put it all to work. 10 to 15 minutes a day is all we ask for greatness. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.